Hey everyone, welcome back. Today we are taking a deep dive into something pretty interesting.
Yeah, this one's a head scratcher.
Walmart. Their stock is at an all-time high right now.
Like, seriously, up a crazy 72% this year.
72%. That's the best performance on the whole Dow.
Even beating out those hot newcomers like Nvidia.
So we're looking at this article from The Motley Fool,
It's a recent one. Came out November 27th.
and they're asking the big question.
The million-dollar question.
Is Walmart actually a good buy right now?
Or is this like a bubble that's about to burst?
I mean, it's Walmart.
You think steady, reliable,
The blue chip, everyday low prices kind of company.
but suddenly they're acting like some high-growth tech stock.
It's wild. So we're going to dig into this.
Want to look past those headlines.
See what's really going on.
Exactly. Why are they suddenly everyone's darling?
The Motley Fool article has this chart showing Walmart's revenue and operating margins.
Going back 20 years.
20 years. What jumps out when you see that?
Well, you can kind of see distinct chapters in their story.
Oh, like what? There's this period of boom, strong growth in the late 2000s.
Okay, makes sense.
But then things slow down in the 2010s.
Yeah, that's when the whole retail landscape started changing.
Online shopping was taking off.
Amazon was like the big monster in the room.
Right. So it's even more remarkable how Walmart navigated all that,
Not just survived,
but came out stronger.
especially after the pandemic hit.
Yeah. That was a real test for everyone.
So they didn't just avoid the retail apocalypse.
They're actually thriving in it.
It's kind of crazy. What's their secret?
Well, it's a mix of things.
Right.
Smart investments, a real willingness to adapt and change.
So give me an example.
Walmart Plus a Puce, their subscription service.
Oh, yeah, that one. They launched it right when the pandemic hit.
Talk about timing. Bold move.
But it's really paying off for them now.
Big time. Double-digit income growth quarter after quarter.
So they basically turned a crisis into an opportunity.
Exactly. But it's not just Walmart Plus I.
Yeah.
They've been busy all over their e-commerce platform.
Right, I was just going to say, it's not just that one thing.
Their overall e-commerce sales are up 27%.
Wow, 27%. That's huge.
But what's really cool is they're not just building a shop online. They're building a whole ecosystem.
What do you mean by that?
They have their own marketplace for third-party sellers.
Oh, okay, so like their own version of Amazon within Walmart.
Yeah. And then there's Walmart Connect.
What's that?
It's like a toolkit. Helps businesses market and grow on their platform.
So like sponsored searches and stuff?
Yeah, like that. Plus in-store ads.
They have those?
Oh, yeah. Plus they have customized virtual storefronts. A whole ecosystem.
So it's not just about competing with Amazon.
They're innovating.
Yeah.
Creating their own thing.
And it's working.
It's translating to real results.
Yeah.
Over half of their U.S. comparable sales growth.
Yeah.
That's coming directly from e-commerce.
Wow. So their strategy is really paying off.
No doubt about it.
This isn't the Walmart I remember from when I was a kid.
Right. It's like a totally different company.
But there's one thing that really caught my eye when I was reading this article.
What's that?
Their capital expenditures.
CapEx. Yeah. What about it?
They're spending a lot more than they used to.
A lot more. How much?
Like double what they were spending just 5 years ago.
Seriously. Double. That's a huge jump.
It is. So what does that tell us?
Well, it tells us they're not just sitting back, enjoying the success. They're doubling down on investments for future growth.
So like what kind of investments are we talking about?
New stores, for one.
They're still opening those.
Oh, yeah. Remodels, supply chain upgrades, even AI.
AI for Walmart.
Bet. They're using it for product categorization.
Yeah.
Really cutting-edge stuff.
Wow. So they're really playing the long game here.
That's right. Not just trying to pump up the stock price right now. They're building something that's going to last.
It's almost like we're acting like a startup.
I know, right? Not this giant established company. It's a pretty fascinating shift.
And their CEO, Doug McMillon, he seems to be behind all this.
Oh, absolutely. He's driving the change.
He had this great quote in the article.
What was it?
He called their approach appropriately aggressive.
I love that.
Me too.
Yeah.
It sums up their mindset perfectly.
It really does. Like, we're going to be smart about this.
But we're not afraid to take some risks.
Yeah. We're going to go after what we want.
He believes they can stay competitive on price,
Which is huge for Walmart.
keep wages up.
And still boost profits faster than sales.
That's a pretty bold statement.
It is. But is it realistic?
Is this even the same Walmart we thought we knew?
That's the question. Have they woken up from a long sleep? Or is this too good to be true?
So many questions. We're going to dig into all that.
But first, a quick break.
Okay, so we've seen how Walmart is really transforming.
It's pretty impressive.
like a total makeover. But before everyone runs out to buy their stock,
Yeah, we got to pump the brakes a bit.
we need to weigh the good and the bad. Let's start with the good.
The bull case, as they say.
Why are investors so excited about Walmart right now?
Well, it's a classic story of adaptability.
And execute.
Exactly. They didn't just survive the retail apocalypse.
They're like thriving in it
Yeah. They saw where things were going,
with e-commerce.
and they made big moves.
Yeah,
Not just to keep up.
but to be ahead of the game.
Right. They could easily gone the way of Blockbuster.
Oh yeah, clinging to the old ways.
All the world passed them by. But they embraced the change.
And built this whole digital ecosystem.
And it's working. Look at the numbers.
Their e-commerce is booming.
The subscription service is growing like crazy.
And their financials are looking good.
They're projecting solid growth across the board.
And they're not afraid to invest in the future.
Yeah, all those capital expenditures.
Shows they're really confident.
It's like they're saying, we believe in this
We're here to stay.
and grow. And Doug McMillon, their CEO.
He's a big part of this too.
Oh, absolutely. He's the one leading the charge.
I love that quote. Appropriately aggressive.
It's perfect. It captures their whole attitude.
They're smart.
But they're willing to take risks.
They know what they want.
And they're going to go for it,
He thinks they can keep prices low,
which is Walmart's bread and butter,
keep wages up.
and boost profits faster than sales.
That's a bold statement.
It is. But can they pull it off?
So for investors who buy into this whole narrative,
The new Walmart,
a company that's firing on all cylinders,
well positioned for growth.
the stock looks pretty good.
But there's another side to the story.
Right, we got to talk about the downsides.
A bear case.
Why might someone not want to invest in Walmart right now?
Well, the big one is the valuation.
That PE ratio of 36.5,
It's making some people nervous.
it means they're expecting a lot of growth.
Yeah, a lot of that future success.
It's already baked into the stock price.
So there's not much room for error.
If they don't meet those expectations,
The stock could take a hit,
and then there's the dividend yield.
which is kind of surprising.
For a dividend king,
You'd think they'd offer a better yield.
especially with the stock doing so well,
It's funny how that works.
the high stock price actually makes the yield lower.
Even if the dividend payout stays the same.
So it's like a trade-off. You get the capital appreciation.
But the income is lower.
It depends what you're looking for as an investor.
Growth or income.
If you want those steady dividends,
Walmart might not be the best bet right now.
even with that dividend king status,
So the bear case isn't saying Walmart's a bad company.
or that their strategy is wrong,
It's more about being realistic,
understanding the risks,
especially with that high valuation.
and the low dividend yield
Got to weigh the potential rewards.
against the potential downsides.
And right now, with Walmart, those scales might be tipping a bit toward caution.
Okay, so we've looked at both sides.
The bull case and the bear case.
We've crunched the numbers,
Analyze the trends.
tried to make sense of this whole situation.
This Walmart paradox.
So where does that leave us?
Should you buy their stock or not?
That's $1 million question.
And like most things in life,
There's no easy answer.
it really depends on your personal goals.
Your risk tolerance.
Your overall investment strategy.
We're not giving financial advice here,
You're just trying to give you the information.
so you can make an informed decision.
And to help you even more.
Let's look at one more thing from the article.
Oh yeah, this is an interesting one.
How Walmart performs during recessions.
It's kind of counterintuitive.
Yeah, you'd think people would cut back.
When the economy's bad.
But the article suggests they actually do well during those times.
It's a fascinating point.
Yeah.
We're going to dive into that.
Right after this. Okay, so we're back, and we've talked about all these amazing things Walmart's doing.
Right there, digital shit. Push those investments.
But there's this one last thing that's kind of a head-scratcher.
Yeah, it's kind of counterintuitive.
How Walmart performs when the economy goes south.
During recessions.
The article mentioned they actually do pretty well.
Yeah, which is surprising at first.
You'd think people would cut back on spending.
When times are tough.
But with Walmart, it seems to be the opposite.
It makes sense when you think about it.
So break it down for me.
Well, Walmart sells a lot of essentials.
The everyday stuff everyone needs.
Groceries, toiletries, cleaning
The
supplies.
stuff you can't really cut back on.
Exactly. No matter how bad the economy gets,
People still got to eat.
they still got to keep their houses clean.
So Walmart becomes like a safe haven.
When people are tightening their belts,
They know they can get those essentials.
at Walmart, at good prices.
And Walmart's size helps them too, right?
Absolutely. They have this massive scale.
So they can negotiate better deals with suppliers.
They have this super efficient supply chain,
Keeps costs down.
even when things are tough.
So it's not just about selling the right things.
It's about selling them at a scale that's hard to beat.
They're almost built for economic uncertainty.
That's a pretty fascinating aspect of their business.
And it makes you wonder, could Walmart be a good investment during a recession?
That's an interesting question.
Like a hedge against the downturn?
We've seen it before
Investors tend to flock to quality.
when things get shaky.
They want companies with strong fundamentals.
Companies that can weather the storm.
And Walmart seems to fit that bill pretty well.
Yeah. So while their high valuation might scare some people off,
This recession-proof aspect adds another layer to the story.
makes it even more complex.
So there you have it, folks.
The Walmart saga.
A company in transformation
From brick-and-mortar giant
to digital powerhouse.
to the surprisingly resilient business model.
We've covered a lot of ground today.
Analyze their financial.
Debated their valuation,
Unpack those complex concepts.
like CapEx and dividend yields. But hopefully we've given you the information you need
To make your own informed decisions.
about whether Walmart deserves a spot in your portfolio.
Remember, investing is all about understanding the big picture
Making choices that align with your goals.
and your risk tolerance.
So stay curious
Stay informed.
and never stop learning.
That's the key.
Thanks for joining us on this deep dive into the world of Walmart.
It's been a fascinating journey.
Until next time, happy investing, everyone.